and welcome to the first meeting of the Scottish Commission for Public Audit in 2020. As always, I would ask members and witnesses to, right from the outset, to keep questions and answers concise and to the point. And as always, I remind anybody that if they've got electronic devices, can they please put them on silent mode. Now, item 1 on the agenda is the decision on taking business in private. We'd ask the agreement of members to take agenda items 4 and 5 in private. Are members agreed? Thank you. So we now move on to agenda item 2, which is Audit Scotland's Spring Budget Revision. Now, this is consideration of the Spring Budget Revision for 2019-20. Members have a copy of the Spring Budget Revision in their meeting papers. I'd also like to welcome to the meeting Ian Leach, Chair of the Board of Audit Scotland, and Ian, of course, is accompanied by Caroline Gardner, Auditor General for Scotland, Diane McGiffin, Chief Operating Officer, and Stuart Dennis, Corporate Finance Manager, Audit Scotland. Now, today is a very significant day, actually, because this is Ian Leach's last appearance in front of the Commission before he demits office. So I'd like to put on record the Commission's thanks to Ian for his hard work and the great efforts he's been putting in as Chair over this past period. It really is appreciated. I would now invite Ian Leach and Caroline Gardner to make any short introductory remarks.
Thank you for your nice remarks, Sir Chair. I shall very brief in my introductory remarks, given this is my last appearance, barring some unforeseen circumstance, and under the caution not to get the mob happy as a consequence. We're happy to talk through the proposals and answer any questions you have on our budget. As you're well aware, we live in unique, if not thoroughly interesting times. We've been going through a period of significant changes, and there are more on the horizon. Although the full implications of EU withdrawal are still very unclear, it will have a profound impact on Scotland's public sector. This includes Audit Scotland. In the short term, that is beyond the current and the proposed financial year, it could have a profound impact on our budgets if, for example, there is no replacement for the European Agricultural Fund account audit fee. This would account for approximately £1 million of our income. So obviously we need to take great care and look at our responsibilities in this regard. Like others, we are having to steer our organisation through this and manage the increases in our responsibilities and the wider risks and uncertainties in this environment. In doing this, we are balancing our recognition of the limitations on public resources and providing a cost-effective audit service with the need to continue improving the quality of audit and cater for Scotland's growing powers and public spending. Our budget reflects these factors throughout and aims to ensure that Audit Scotland is as well placed as it can be for what comes next. And with your permission, Convener, I'll hand over to Caroline Gardner in her capacity as Accountable Officer. Thank you.
Thank you, Ian. I'll step back from Ian's general introduction to focus on the Spring Budget Revision initially, if I may, Convener, and we'll pause at that point. As you know, we bring a proposal each year to the Commission for AME funding, the Annually Managed Expenditure funding, to cover the non-cash pension charges that we need to meet in respect of the local government's superannuation scheme. The overall AME cover for Scotland is redetermined once a year through the Spring Budget Revision, and we have a routine process now for coming to you at this point in the year. This year there are two elements to our proposal, unlike previous years. The first is due to a reduction in the discount rate since our budget proposal for 2019-20 was submitted to the Commission in December 2018. Based on the actuary's report, which we received in April 2019, we estimate that the pension service cost for this year will be £4.1 million higher than the available budget. The second element of this year's proposal results from the impact of the MacLeod case on pension liabilities. In June last year, the UK government was refused leave to appeal the decision, and the employees affected will need to be compensated. The costs of this are still unclear, although the UK government estimates that they may be around £4 billion UK-wide. Initial estimates by the Local Government Pension Scheme actuary indicate that the potential past service costs for Audit Scotland may be in the region of £2 million, but the figure could be significantly higher or lower depending on the agreement that's finally reached. And it's also expected that the in-year pension benefit costs will also increase from the original forecast. Since we're unable to carry forward reserves, any significant shortfall would leave us with a final outturn deficit at the end of the financial year. The Scottish Government Finance Directorate has therefore advised us to request sufficient AMI budget cover to meet potential movements in the non-cash pension charge. We've therefore requested in our proposal the £4.1 million that was forecast by the actuary in April, plus a further £5.9 million to cover any liabilities linked to the McLeod case. Any budget cover which is unused obviously can't be used for any other purpose and will be returned to the Scottish Government for recycling in the usual way. Chair, will pause there, and Stuart and I will do our best to answer the committee's questions, recognising that this is a particularly complicated aspect of our accounting.
Thank you. It's just from memory, it seems that with 1 year's exception, over the past many years as I can remember, there seems to be adjustments for pension deficits, and they seem to just accumulate every year. And I realise there's an actuarial calculation behind this. I realise that there's issues around interest rates and so on, which, you know, long-term interest rates, which impact on those calculations. But when do we come to an end of providing for pensions?
Completely recognise your concern, Chair. If we look back across the history of Audit Scotland, the 20 years since the organisation was established back in 2000, actually for the first 10 years or so, the picture was the other way, that we were returning funding to the Consolidated Fund because it wasn't required. Since about 2012, the movements have been in an adverse direction, and they're getting bigger, as you can see from our proposal. It's almost all down to movements in the discount rate. Stuart can keep me straight, but a very small movement in the discount rate leads to quite a large change in the liabilities. And what we've seen since last year is a reduction in the discount rate that's used to value future pension liabilities from 0.3% to minus 0.1%. And that has a significant impact on the non-cash accounting charge we need to make through our income and expenditure account. That will reverse at some point in the future, but none of us knows when it will be.
The frustrating thing is that all this money going into the pension fund is not actually improving or increasing the pension that staff are getting at the end of the day.
And I think it's important for us to try and be clear that the accounting charge we're talking about here isn't going into the pension fund. What goes into the pension fund is the employer contributions and the employee contributions that we budget for and meet year in, year out routinely. And that is what will meet the pension liabilities in future. Under international accounting standards, though, we're required to put through our income and expenditure account an accounting charge which reflects the change in the liabilities for the future as best as they can be estimated. That depends on things like life expectancy, but very heavily on the discount rate. When the discount rate changes, the value of that liability changes without, as you say, any impact on the pension that our employees will receive in future. These are purely accounting adjustments that are related to the relevant accounting standard.
I suppose one of the most important assurances that we need is with regard to the Lothian Pensions Fund, which is the liability, where the liability falls. What discussions have you had with the Scottish Government to confirm that the previously agreed arrangements with the HM Treasury remain in place to meet this pension adjustment?
There's two separate sets of discussions that go on every year. The first is the discussions which Stuart, as our corporate finance manager, has with the Lothian Pension Fund and the actuary who's valuing the liabilities. That leads to both the agreement of future contribution rates that we and our staff are making and the accounting adjustments that we're talking about here today. And the board looks at that very closely each year to make sure that we're confident that the level of contributions and any top-up payments we're making are managing the liabilities. Alongside that, Stuart engages with the Scottish Government around the amount of AMI cover we should be adjusting to cover this accounting charge, not a cash charge, but an accounting charge, to make sure that our accounts don't end up with deficit at the end of the year. The Scottish Government is comfortable with the proposal we're making to you this year, reflecting the level of uncertainty that's involved, and the board is comfortable that the contributions we're making to the Lothian Pension Fund are over the long term adequate to meet the liabilities that are being incurred as staff deliver their pensionable service. Stuart, is there anything you want to add to that?
No, that's correct. I mean, there's a triennial valuation, and the next one will be due from the start of April this year, and that is used to work out what contribution rates there will be from the employer, and that is an actual cash adjustment. This is, as the Auditor General says, a purely accounting adjustment to recognise what the future liability is, and then we have a separate valuation that is done to work out what the contributions are going forward as an employer.
Let me bring in Bill Bowman at that point.
Thank you, Convener. Morning. So to speak then about the 5.9 million, I think you said in your introduction that the Scottish Government wanted you to make an adjustment sufficient to meet the non-cash shortfall. There's a 2 million suggestion from the actuary of a number, but I think again you said it could be significantly less or significantly more. So how exactly does the 5.9 million come about?
The initial estimate from the actuary for the potential past service costs that may be affected by the MacLeod judgment is £2 million. That's an initial assessment before any negotiations have been entered into around what the agreement might be for compensating the pension scheme members who were affected. And the actuary has indicated that there's a lot of uncertainty around it in both directions. On top of that, though, we expect that the in-year pension benefit will also increase as a result of MacLeod. So there's 2 million plus an unknown number, and then quite a large band of uncertainty either side of that aggregate number. As the Commission knows, Audit Scotland isn't able to hold reserves, so any increase in our liability that has to go through the accounts would lead to an unbudgeted deficit unless we have AMI cover, and that would clearly not be a good position for us to be in as an organisation, or for the Commission as the body that oversees our finances. But it's the 2 million plus an unknown number for past pension cost, and then the uncertain range either side of it.
Number to come to 5. Is there a piece of paper that goes something 5.9?
To be frank, Mr. Bowman, it is 2 million plus an unknown number, and then the only other parameters we have are a significant degree of uncertainty from the actuary. You can see that we've taken 4.1 million plus 5.9 to come up with a round number of 10 million. It's the best estimate we can make at this stage, and the government have indicated that they think that's an appropriate course of action for us to take.
Well, thank you for your frankness on that. So has the government then given you an instruction or a written acknowledgement, this is the number you should have in your, or we're happy that you have in your accounts, or in the budget, sorry? They haven't given us an indication of the number we should include. They know that we're proposing 10 million to cover both the 4.1 million past service pension cost and the MacLeod figure. And they also know that any budget cover that isn't required will simply be recycled into the system in the usual way. Excuse my issue here, but I mean, I've been in this position where an organisation's told me, oh yes, the funding body is very aware of it all and is quite in agreement, and then it turns out they're not. Do you have some form of formal arrangement with them that they will accept this 3.9?
Stuart, do you want to talk through the discussions you've had with Scottish Government?
Yes, initially I had discussions on the uncertainty of this arrangement. But on top of that, every year we submit to the Scottish Government details of what our AMI cover requirement will be. They then use that as a tool to negotiate with HM Treasury on behalf of the Scottish Government. So they are aware that this is what we're looking for, and there's been no feedback to say that this is out of the ordinary. So that is what we would be expecting.
I mean, would you not be more comfortable if you wrote to them, let's say, or had a formal exchange with them saying this is what we're putting in and we trust you're comfortable with it?
I have had that email audit trail back to them submitting what our requirement is and an explanation of the reasoning behind that, and they've accepted that as part of their negotiations that they take forward on behalf of the whole of the Scottish negotiations for AMI cover as part of the spring budget revision.
If you didn't make this adjustment and it was wrong, would it not just be part of another budget adjustment?
No, because the proposal that we're making now relates to 2019-20. So when we complete our final accounts for the current financial year between April and May, anything for which we don't have budget cover would lead to an unbudgeted overspend, which is clearly not a position that I want to be in as the Auditor General and the Accountable Officer.
Just one final point then, with your Auditor General hat on. You were seeing other organisations doing this?
There are actually very few organisations that are in the same position as us. We're unusual because we have almost all of our staff who are members of the Local Government Pension Scheme, which is a funded defined benefit scheme and therefore needs to be accounted for under IAS 19. And at the same time, we have to prepare our accounts under the Scottish Financial Reporting Manual, and we can't carry reserves. The three of those things mean that we are one of the few organisations that needs to be making AMI provision in quite this way. Most local authorities are able to carry reserves which they can use to cover the accounting adjustment, and most central government bodies are members of the Principal Civil Service Pension Scheme, which is unfunded and where the liabilities and assets aren't broken down by body. As Stuart says, the AMI process is common to us and the other people who require it, but our particular circumstances are quite unusual.
So well, just one final. Have you spoken to your auditors about accepting this level of unquantifiable, unknown in your accounts?
Again, I'll ask Stuart to come in a moment, but the Commission will be aware that in our annual report and accounts last year, we had a contingent liability for the MacLeod judgment. That is now starting to crystallise, and we're now into a slightly more certain picture. We hope that will develop in future, but Stuart has been talking to our auditor since it first became an issue.
Yes, I can confirm I've been in negotiation and discussions with our auditors about this issue.
That's it.
They understand the accounting requirements and why they apply to us in this particular way. I think their concern will be that we have AMI budget cover for the figure, and that we are going through an appropriate process to estimate how large that would be. They recognise the degree of uncertainty that's involved.
Can I bring Jenny Mara in now?
Good morning. I'd like to ask the panel on the same topic if Audit Scotland has received any information on when the full implications of the MacLeod judgment will be known, including the likelihood of increased employer contributions for staff pensions.
In a position to answer that one.
As you'll imagine, from an auditing perspective, this is something that in our core work we have auditors engaged in, and the latest information we have, which relates to CIPFA, the Chartered Institute of Public Finance Accountants' consideration of this, is that the clarity would not be expected until later in 2021, but possibly going into 21-22. Now that is at the moment, and that may change. But we have to operate with the best information that we have in great uncertainty. CIPFA are having a meeting about this on Monday, and there may be further papers or briefings after that.
Okay, thank you.
Do any other members have any questions they would like to ask on this? No? In that case, I'll thank the witnesses for their contributions and move on to agenda item 3, and it's the same witnesses for this agenda item, which is Audit Scotland's budget proposal for 2020 to 2021. Members have a copy of the budget proposal in their papers, and I'd like to invite firstly Chair of the Board, Ian Leach, if he wishes to make any short introductory remarks, followed by the Auditor General.
I have nothing further to add to what I've said. The Auditor General, as Accountable Officer, will lead into this one.
Thank you, Ian. As members know, we've been planning for some time for our new responsibilities following the Scotland Acts and the devolution of significant new financial powers to the Scottish Parliament. Today's budget proposal for 2020-21 reflects the third year of our 4-year plan. We have now taken on some of our largest new responsibilities, including the audit of Social Security Scotland and Scotland's new tax-raising powers. Our total proposed budget for 2020-21 increases by 4.7% in real terms to £27.1 million, which equates to 0.06% of Scotland's public sector budget. Our resource requirement for the year is £8.865 million, an increase of £1.273 million or 14.9% in real terms. Several factors contribute to this increase. We're unable to charge fees for most of the new bodies that we audit, which includes some of the biggest and most complex public bodies in Scotland. And restructuring means that some of the bodies for which we previously charged fees now come under the Scottish Consolidated Fund and are therefore no longer chargeable. We continue to focus on delivering value for money as we build the skills and capacity we need to support Parliament and fulfil our statutory responsibilities, building on the efficiencies we've achieved in previous years. Like all public services, we're continuing to operate in an environment of significant uncertainty, as the Chair said, but we'll continue to monitor events closely and to keep in touch with the Commission as appropriate. Chair, will do our best to answer the Commission's questions.
Thank you. I'll ask Jenny Mara to start off the questions.
Thank you, Chair. Thank you very much, Auditor General. Obviously, it's quite a big increase we see in Audit Scotland's budget at a time when, thinking back to our work on the Audit Committee, several public bodies are actually having to do more with less. And I think the Auditor General is acutely aware of that. That said, I fully appreciate the devolved powers is putting a lot more pressure, and it's a lot of intricate work as well, especially regarding the new powers over social security. So I'd like to first pick up on something you said in your opening remarks, Auditor General, just for the record, and move into a couple of questions. But you said that Audit Scotland's ability to charge fees has been reduced because, I think you said, more bodies have moved into the Scottish Consolidated Funds. Can you tell us why that is?
Certainly, Ms Mara, there's two elements to that. As the Commission knows, that there are some bodies for which we can charge an audit fee to the body, and about 3/4 of our overall income comes from that source. Some of the bodies were unable to do that because of where they sit in relation to the Scottish Consolidated Fund, and that's set out in the legislation, the Public Finance and Accountability Act 2000. Most of the new bodies that we've taken on responsibility for this year, including Social Security Scotland, but also bodies like Revenue Scotland and the Fiscal Commission, sit in that category where we can't charge a fee for it, and therefore the cost of the audit falls to the funds that the SCPA approves and oversees for us each year. That's the biggest part of the shift that you're seeing there. At the same time, there's been some restructuring within the public sector in Scotland, with the bodies relating to forestry coming out of the fee charging category and moving instead into the group of bodies for which we can't charge a fee. And again, that represents an increased call on the funding which the Commission approves for us. The two together account for a significant part of the increase we're seeing here.
Okay, thank you very much. I'd like to move on to the discrepancy between your budget forecast and what you're actually looking for now. It's an increase of £538,000. Can you explain what has changed exactly that the 3-year projection has actually underestimated what you need, and it's now over £500,000 more?
The Commission knows that we have put in place a 4-year plan to respond to the Scotland Act as the new powers come into being. Within that plan, we've always shown a range of estimates, a low point, a midpoint and a high point. And you're right, the figures that we've put forward this year are towards the upper end of the range for 2020-21. I think there's a couple of things that account for that. The first is the scale of the change we've seen, particularly in relation to social security, where we have seen very complex arrangements being put in place for delivering the new social security responsibilities, different arrangements for different benefits, and a significant reliance on the delivery systems of the Department for Work and Pensions at a UK level, which have all led to extra work. And you, as convener of the Public Audit Committee, will recall that we actually qualified the Accounts of Social Security Scotland this year, reflecting that complexity. The second factor is the pace of change that's happened. So we have seen the delivery of a number of benefits brought forward, and new benefits such as the new child payment being introduced on a tight timescale. And all of that has meant that we have had to ramp up our capacity to carry out that audit in particular more quickly than we expected to when we first put the plan together.
Sounds like some of the teething problems with Social Security Scotland is actually having a much wider impact than mean your answer for that over £500,000 is solely attributable to the social security system?
I don't think it's solely attributable to it, and Stuart may want to add in a moment, but certainly decisions about the government has made about the way in which social security is delivered and the timescale have meant that we've had to move to the upper end of our range of estimates for this year rather than being around the midpoint as we have been in the previous 2 years. Stuart, is there anything you want to add to that?
Not really. I think you've covered the main area. That is the main reason, is because we've had to go to the higher end of the business case that we originally presented to the SCPA back in 1819, and that's the reason why we need the higher end now.
Auditor General, as you come towards the end of your tenure, I mean, do you see it increasing again because of the social security situation?
I would say not because of social security. I think to an extent what we're seeing here is a timing issue rather than an increase in the overall volume of work. We're getting a clearer picture of that. We're building capacity. I wouldn't expect it to keep on increasing due to social security. But as the chair of the board said in his opening remarks, we are still facing a fair amount of uncertainty. Immediately due to EU withdrawal, we don't know what funding will be returned to Scotland rather than to a UK level as we head through the transition period. And clearly, the constitutional position is still not stable, with disagreement between the Scottish Government and the UK Government about a further referendum. None of us knows what may come out of that conversation, as we saw with the Scotland Act 2016 after 2014. That's the sort of uncertainty that I'd highlight for the future.
Okay. Can I ask you on value for money? So Audit Scotland's budget now equates to 0.06 of the public sector budget. How does that percentage compare with previous years, and what conclusions can you draw from that?
I'm not sure if Stuart can give you that figure as we sit at the table now. A different comparison I can offer, if I may, though, is that you talked about me coming towards the end of my term as Auditor General. I've been looking back over our budget compared to the Scottish budget over a longer period. If you, in the past 15 years, our budget has risen from £24 million in 2005-06 to £27 million proposed in 2020-21 in cash terms. In real terms, that's a reduction of about 17%. So we've made some really significant savings in the budget over that period in real terms. And at the same time, the total Scottish public sector spending that we audit has risen from £27 billion to £42 billion. So a steep increase in what we're auditing and a 17% reduction real terms in the cost of doing it. I think that's the assurance that I'd offer to the Commission, that we are taking our own responsibilities for value for money very seriously.
Okay. It's an impressive assurance, well expressed, I think. Can I also ask, do other bodies you audit use this comparison, the percentage of the public sector budget and what your budget equates to? Do other public sector bodies use it? And if so, how does Audit Scotland compare to them?
I'm not aware of other public bodies using it. We know that the National Audit Office historically have used a ratio for every pound they spend compared to the pounds that they save. They've been reviewing that because they think it doesn't do justice to the range of the work they do. And it's not a comparison that we're able to directly make because our baseline has been different, with a lack in the past of social security spending and defence spending, which is where lots of the savings generated by the NAO have come from.
Sorry, forgive me, Auditor General. I meant to say audit bodies. Have other, like the NAO, they do this comparison, do they?
The NAO express it in terms of pounds saved per pound spent, but it's not a straightforward comparison for us to make because of differences in the coverage of what we do, particularly now defence spending, where there have historically been a very high level of savings to be identified.
Thank you very much.
Bill?
Thank you. I've got a couple of questions around staff and staff numbers. In the budget, you state that the capital funding requirement for 2021 is 150,000. I think that's the same as last year, and looking forward, it's the same number for the next couple of years. I mean, given the number of additional staff members you're planning, I think is it 6.6 whole-time equivalents for 2021, then a further projected increase in headcount going forward, an additional 24.5 by 2024-25. how do you assure yourself that current and projected capital funding is adequate and sustainable for these staff increases?
Good morning. I think that we have a very detailed budget planning process for IT hardware, for example, which is where the largest amount of capital requirement would go, and also software and software licenses, which we have. The capital budget is our need for it has been stable despite growth, because more of our IT costs are in revenue funding, because we've moved a lot of our IT services to the cloud. We keep a close eye on our workforce planning and our resource planning, and at the moment we have incorporated within our capital proposals resourcing for new staffing. If there was any other significant shifts, we might have to change the future projections, but our first port of call would be to prioritise within the capital budget any additional work that we have. So we have resourcing and equipment to meet above the establishment at the moment, to ensure that when we bring in temporary staff or short-term secondments or placements, we can provide those people with equipment. So there is a body of resource that's available to help support all of this.
I mean, I don't know exactly what equipment staff members have, but if they have a laptop, is that capital, or do you just expense it when you replace it, or how do you deal with these things?
I'll ask Stuart to explain the accounting treatment of it.
That's capital. We would have a replacement programme where we would update the laptops and replace them on an ongoing basis, and we would also have sufficient capacity so we could hand out any for temporary staff if required. So it would
biggest item in your capital expenditure?
On IT equipment, it
yes,
would be
yes.
Laptops. And so on, although again over time the price of IT equipment individually has come down, and so on, and we are able to through good procurement practice secure good pricing for the IT equipment that we buy and secure value for money.
And is that the main part of your capital spend?
It hasn't always been, because we have in the past requested capital funding to refurbish buildings or make adjustment to our accommodation. We don't have any plans in this current budget to do that, but should we need to rethink our property footprint, we would come back to you with a presentation and a discussion about what our needs might be. In this budget proposal, the main requirements are around IT resourcing and other equipment. So
you would actually expect to spend 150?
We would, yeah.
Okay. On another aspect of staffing, I maybe missed it in here, but I think I've asked you before. I mean, your other main asset is your staff. Where do you discuss, let's call it productivity or efficiency of staff? Because you can increase headcount for a particular reason, but that increase could be masked by other people working harder, working less productive manner. Now, how do we get a feel for what the increase in headcount actually means?
In a number of ways, I think the Auditor General has outlined for you the real terms reduction in our funding and resourcing requirements over time, as well as the growth in the number of bodies that we audit. So if you take those things together, you'll see that over time we are continually auditing more, and our real price resource requirement has been reducing. On an operational basis, all audits that we do have a notional allocation of days related to the fee, and at our management of the business group level and at the management of the audit level, managers and directors and audit directors are involved in daily and weekly discussions about the resources required to complete audits, the efficiency required, comparing that data against others in the business and other data that we have for benchmarking, looking at the time recording information that we have and continually prioritising and allocating resources to achieve efficiency. We've recently reported on this through our audit committee, and that's been a regular feature of discussion at the board and the audit committee on a quarterly basis when we present our in-year results about the progress we're making in delivering our work and the expenditure that we've got going through that, the allocation of resources to it.
I mean, to follow Jenny Mara's point about, say, social security, I mean, the first year will be the one where you spend more time than you would hope. You would become more efficient on that as you get to know the organisation and presumably other elements of new work. Is there any particular measure that would be useful for us to see in terms of how you look at staff efficiency?
I think the quarterly performance reports which we publish and are on our website and which are presented to the board, scrutinised by the audit committee at Audit Scotland and then discussed at the board, might be helpful to show you the suite of key performance indicators that are used, that we use regularly to track all aspects of the business, and we'd be very happy to have a discussion with you offline once you had the chance to digest that. It's a very comprehensive suite of measures, and what I'd say is that the audit committee and the board look at all of that in the round.
Just one final point on that. How do you balance, I suppose, a drive to efficiency with the maintenance of quality?
I think that's the task that we're all involved in on a daily basis. You've put your finger right on it. That's the daily job that everyone's involved in. And we have independent look at the quality of our work. We have peer review and internal review of the quality of our work. And we have all the data and information we have about our use of resources. So we are continually looking at that internally as a business, internally in business groups, reporting to management team, the audit committee and the board. But we also report back through our annual quality report to the Commissioners of Audit, to the Auditor General and to the Accounts Commission on what the quality of the audit has been. So we have a whole system of processes in place that lead to a view being able to be formed on the quality of the work that we have delivered on behalf of the Auditor General and the Accounts Commission.
That's something the board takes very seriously. Against a climate currently in the commercial sector where audit is under some suspicion as to its capability of reporting properly. We have our audit quality framework, which you know about. We have the independent testing by ICAS. We have the internal mechanisms for checking this, because we are absolutely concerned to make sure that the public sector audit model in Scotland is the best it can be, and certainly the best in the UK. And that's something the board has very much got a grip of.
Okay, can I bring in Alison Johnson at this point?
Yeah, thank you, Convener, and good afternoon. Following on from Bill Bowman's questions about staffing and numbers and so on, it's more about the makeup of that staff complement and the gender balance within that. In relation to the 2018-19 budget bid, Audit Scotland highlighted the equal pay review from April 2015 to March 16 and found that the gender pay gap for Audit Scotland showed at that point that women earn around 4.5% less than men. And at that time, the Commission also sought information on the pay ratio between the highest and lowest paid staff members within Audit Scotland. And Russell Frith, the Assistant Auditor General, stated, "The disclosure in our accounts to March 2017 was that the multiple between the median salary, which is the one that is required to be disclosed, and the highest one was 3.4 times. In our budget report for 2018-19, we very much welcomed the active measures that had been taken to monitor pay ratios and the gender pay gap within the organisation. In relation to pay proposals within this budget proposal, do you anticipate that it will further reduce the gender pay gap and the pay ratios?"
I'll answer, and then Diane may want to come in from there. As the Commission knows, we have a fixed cycle for reporting both the pay ratios and the gender pay gap. They're slightly different. The pay ratio is included in our annual report and accounts every year, and the gender pay gap we report every 2 years in line with the requirements placed on us. I would expect that the pay ratio, which is published in June of this year for the 2018-19 financial year, will show a reduction. Talking in broad terms, I think that's because the movement of pay for staff within Audit Scotland has been more significant because of the way pay progression works in the organisation than it has for the most highly paid person in the organisation whose pay is set differently. My pay is set by the SPCB and it's done on a different basis, so I would expect that ratio to have reduced again. The gender pay gap is always more difficult for us to predict because although we take very seriously our responsibilities for equal pay in the broadest sense, the gender pay gap is very sensitive, as you will know, to changes in the composition of the workforce. So we know that last time round it actually grew slightly, largely because we had recruited a large number of trainee auditors who were women. More than half of our new trainees were women. So we had an influx of people who will become highly paid professionals in future, but at the bottom end of our pay scales at that point in time. So the pay gap increased at that point in time, and we would expect it to come down over a longer period. Whether it will have done over that 2-year period, we don't yet know. Diane, I'm not sure if you want to add to that.
What I would add, thank you for the question, is that the report that we published on our Gender Pay Gap Report 2018 will be followed up in 2 months' time in March, and there'll be follow-up information then. And I've made a suggestion to the Secretary to the Commission that there may be an opportunity to bring that close into discussion in our June session, when you'll have much more current information available. As the Auditor General has said, the last report that we had showed that the median pay gap was driven by largely by an increase in the number of women joining our professional trainee scheme, which is a great thing. The gender split there was 57% of professional trainees in that report who joined us were women. What will influence the next report is whether the last intake has been, what the balance has been there in terms of men and women. And we monitor that over time, being very careful to understand what it means. You'll know from gender pay gap reporting that the report looks at the upper quartile, upper middle quartile, lower middle quartile and lower quartile. The main entry route into Audit Scotland is through the graduate trainee scheme. It's a significant number of people each year, so it has a significant impact on our figures, and we'll be able to give you a fuller analysis of where we are now in 2 months' time when we produce our next report, and we'd be very happy to do that.
On the point that the graduate intake, that 57% were women, how did that come about? Was that a proactive measure? Has there been work going on behind the scenes to ensure that women are attracted to the profession?
We're doing work to ensure that we are attractive to a diverse range of applicants for roles. So we have been doing quite a lot of work on that. We haven't been able to make a direct correlation between the activity that we have and the outcome in terms of offers that we make and appointments, but we do look at all of that, and we do look at all of those figures through our diversity monitoring reports. So we'll look at the gender mix of the applicants we get for all roles, including graduate trainees, the levels of interest we get. We'll analyse also the gender balance of shortlisted candidates and the gender balance of offers made. We also look, once people join us, at the gender balance of training opportunities, of adjusted working hours and so on. So we have quite a detailed look at all of those factors in managing the business. I wouldn't be able to say we could directly correlate our activity with the outcomes, but what I would say is we work very hard to reach a diverse range of people to come and join us, and also that we are making sure that we are an attractive employer with a good culture and a good place to work to reach many people. We'd like to have a diverse workforce, and by and large we've been good at doing that.
I mean, obviously, to attract that diverse workforce, it's about more than salary, which you'll appreciate. It's about flexibility. We know, for example, that 92% of single parents are women. Is there, an opportunity for people who require a bit more flexibility to get involved in the profession? Is that message getting out there?
Well, we're doing our best to get that message out there on behalf of ourselves, and I think in the profession that's certainly of growing interest to many in the profession, including firms who have a lot of work going on to retain women particularly, and also to encourage women who have left the profession to return. For ourselves, we have a very strong offering in terms of flexible working practices, a whole range of things. And we also have something that we call our time, place, travel policy, which I might have discussed before, which gives people a lot of autonomy over where and how they work and when they work, in conjunction with their teams and their managers, so that people can manage all of those life events and circumstances that mean for some people starting slightly later or starting slightly earlier is much preferable because of other responsibilities they have. Over the past couple of years, we've also been working on our carers accreditation to support carers of all with all different caring responsibilities, and we have a real focus on that over the next 12 months. So we have a strong offering. We know from feedback from colleagues and from our annual survey that flexible working is something that people who work at Audit Scotland really value. And we know that because we can't lead on salary as an organisation, that whole package in the round and offering a great workplace environment, flexible working and so on is one of the ways in which we'll be able to attract and retain colleagues. So we work quite hard at that.
Thank you. Thank you, Convener.
I'm conscious here of time, so I'll just remind everybody to keep their questions and answers fairly tight. Rona, can I bring you in at this point?
Thank you, Convener. Good afternoon, panel. I'd like to ask you about national performance audits. In your report, you say that 11 Section S22 and S102 reports were issued in 2018-19 and say it's the most you've ever produced in a single year. Apologies if you've covered this earlier and I've missed it, but can you maybe say why that's the most you've produced and what were the most significant issues?
Certainly. Section 22 reports in my area of responsibility and Section 102 reports in local government are the reports that are produced in response to things that happen in public bodies, often things that go wrong. We have alongside that a planned programme of work where we know we intend to do some work on social security, on educational outcomes, on health and social care integration. That's planned. But we then have this reactive area where we have to respond to issues as they emerge. And tomorrow I'll be briefing the Public Audit Committee on events at NHS Lothian and Borge na Gaelic, just to give you a couple of examples. We never know exactly how much of that will be, so we make a planning assumption and we assume broadly that there'll be 7 to 8 each year. They take different amounts of resource depending on the size and complexity of the issue, but that's our planning assumption. If there are more issues than that we think deserve to be reported on, then we do it by flexing the amount of work elsewhere, either by delaying some work, taking longer to complete it, reducing its scope, or in extreme circumstances, taking things out of the programme altogether. So far, we've always been able to do it by flexing the rest of the programme and making sure that we can complete everything that we want to do. But you're right, it is something which is unpredictable and we need to manage it in real time as we see what the issues are each year.
And how has this impacted on, your budgeting proposals for 2021? Has it had a huge impact, or?
In terms of the proposals you've got here, it hasn't had a big impact. We have managed to contain it, as I say, within the overall programme. A couple of things have taken a bit longer than expected in the planned area to make space for Section 22 reports. You'll have noted also from our proposal that we've maintained the management contingency of £300,000. The purpose of that is to enable us to respond to unexpected things that we can't plan for at the beginning of the year, and that this is one of the calls that it's available for.
And you talked about sort of postponing certain things in light of things that you have to, you have to make provision for. I mean, would that be? Can you give us a time scale on that? Would that be for some programme performance always be deferred for, for years or months or?
It does vary. I'm sorry to give you an it depends answer, but it really does depend. For small additional amounts of resource that's required, it might be as simple as delaying publication for a planned piece of work by 3 months, that we simply push it back a bit to give that team time to complete the work on the Section 22 report and the support to Parliament that's involved, and they then go back and complete the work that they were planning to. For other things, it may mean simply saying, in the light of all the calls on our time, this is now a lower priority and we'll put it on the back burner within the planning for the overall performance audit programme. We plan that firmly for 1 year with indications of what's coming for a couple of years out past that, and the Commission and I will quite often say, actually this particular issue felt like a priority when we first put it in, but now it's drifting down the running order.
All about priorities and a judgment call on
so.
that.
That's right.
Okay, thank you.
Thank you.
Thanks, Vivian.
Okay, Alison, I think you've got another question to ask.
Yes, thank you. I'd just like to inquire further with regards to other administrative costs. We're told, this is on page 14, that Audit Scotland has advised that an additional £220,000 funding is required in 2021 for the National Fraud Initiative. And I'd just like to better understand what payments will be made using this additional resource. Will the funds be used to recruit additional staff to administer the NFI, or will that cash be used to pay for services relating to the NFI?
I may ask Stuart if he wants to add to this in a moment, but as you know, the National Fraud Initiative is carried out every 2 years. It's a service we provide to public bodies right across Scotland, doing data matching to look for data which suggests there may be duplicate payments or payments that aren't warranted being made. It's carried out on a UK-wide basis, and I think it's currently run by the Cabinet Office, and we make a payment to the Cabinet Office to cover the number of bodies and the number of data matches that will be carried out in Scotland as a service that's provided.
Content with that, Convener. Thank you.
Just one quick question on the National Fraud Initiative. I assume that it appears under the budget line for legal and professional fees.
It's under other administrative costs, I think.
Yeah, in the detail in Appendix 1, it's under legal and professional fees. That's correct.
It is under legal and professional fees.
That's correct. Yeah.
Okay, thank you. Just to continue on this, on page 14, Audit Scotland's identified individual cost pressures in its overall administrative cost budget. And that includes an additional £25,000 being required to bring travel and subsistence costs in line with audit requirements. Now, how specifically has the £25,000 administrative costs arisen, and what steps have been taken to ensure that travel costs take account of carbon impact and other factors?
Dan, do you want to pick that up?
We have a detailed way of managing travel and subsistence costs, and we review closely the patterns of travel and the costs, and we have noticed over the past year that just in terms of the cycle of audits and the deployment of people, there have been more there's been more cost associated with people staying away to be more efficient and be in audit locations for prolonged periods of times rather than multiple travel and so on. So it's a combination of things. We publish annually a report on our carbon footprint, and the last report was published in June last year, I think. We have a strong track record of reducing our carbon footprint, and I can send the link to the detail and all of that to the Commission, recognising time issues just now. But we have managed down our carbon emissions from travel over time, and we are currently in the process of resetting what those objectives are. We have a smaller car fleet, generally speaking, we have a smaller car fleet now than we had before. You'll be familiar with our discussions on that in the past. And also there's been a switch from air travel to rail travel in terms of the emission cycle. We also promote active travel. We have a cycle to work scheme that's currently open for colleagues, and we have a strong commitment to efficient travel, using public transport where possible, but also I mentioned earlier the time-place travel policy that we have, which encourages thoughtful use of video conferencing, Skype and so on, to minimise travel and to enable people to take control of that. I can send you a link to the published details of all of that.
That would be useful. Just moving on, page 19, Audit Scotland sets out the 2021 proposed income and expenditure budget on a sector-by-sector basis, demonstrating how its expenditure lines are funded, either from fees charged to audited bodies or from the funding sought from the Parliament. Now, approximately 66% of Audit Scotland's income derives from fees charged, with the remaining 32% being reimbursed by the Parliament. Now, according to Appendix 2 on page 19, it's proposed that 74% of Audit Scotland's governance costs and 40% of its corporate services and overheads costs be met from parliamentary funding. How does Audit Scotland determine the level of parliamentary approved funding to be apportioned to each sector?
This is something that Ian has made one of the defining missions, I guess, of his time as chair of Audit Scotland, to get more clarity and certainty into the way those necessary cost allocations are carried out. And it's summarised in our funding and fee strategy, which we've shared with the Commission in the past. There are two sort of levels of costs, I think, some which are very easy to identify to a particular sector. The direct audit fee, we know that if somebody is spending time on the audit of City of Edinburgh Council, their time should be charged to local government. But in an integrated organisation like Audit Scotland, many costs have to be allocated. Building costs, one example, governance costs that you've identified are another. The funding and fee strategy is underpinned by a very clearly argued and agreed allocation mechanism for each of those categories of costs, which reflects, in some cases, very clear time recording information, and in some cases, explicit assumptions about the way that the costs are allocated. All of that basically goes into a big spreadsheet, which Stuart's in charge of, and that breaks our costs down between the sectors that you see here. There are changes from year to year, as we discussed in answer to Ms Mara's question earlier. Bodies occasionally move from one sector to another, particularly chargeable to non-chargeable central government bodies, but the underlying assumptions remain the same, and they will be revisited on a regular cycle by the board to make sure they remain appropriate as the world changes.
As you'll be aware, Auditor General, the Commission in the past has been very concerned about cross-subsidies and the impact of that. When consideration is given as to whether parliamentary approved funding should be used to fund some sectors over others, for example, should the Accounts Commission costs be met solely from local government fees? How do you work all that out?
That's all covered by the allocation formula that underpins the funding and fee strategy. Stuart will keep me straight, but I think that is very clear that the costs of Accounts Commission members are all met by local government as part of that overall allocation of costs to the local government sector. Other costs where it's less clear where they should sit, for example, the costs of the Audit Scotland management team, there is a working assumption which is used to allocate the cost between the different sectors on a fair and transparent basis. The board looks at that on an annual basis to make sure that they're comfortable that we're applying it properly and that the figures come out of the bottom make sense. And it will be reviewed from time to time to make sure that it remains up to date and appropriate.
The critical thing, Chair, as you'll recollect, was to make sure there was no silo cross-subsidies. That is, local government wasn't being subsidised by the health, or worse still perhaps, the other way around. And that's why we went into this operation some years ago, and we fully involved the Commission in our consultation with all our audited bodies about how we're going to do it. There may be some subsidy within the silo. For example, you wouldn't want the full costs of the audit in the sort of far-reach islands and local authorities to be met wholly by them. There'll be a certain amount of pooling of costs within that silo. But to avoid any suggestion of one silo slipping into another and subsidy, these are clear demarcation lines. On the margins, of course, these management costs have to be considered, and we keep a close eye on that because we regard fee strategy as important to our credibility. And that's why it's so closely observed.
Thank you. I've got a couple of odd questions here, which perhaps I can ask. Perhaps for the first time I see no reference to efficiency savings, and you've always been very good at efficiency savings, but there's no mention at all of it as far as I can see.
We haven't drawn out explicit efficiency savings this time in the way that we have previously. I think partly because we are in a growth position and at the top end of that. We do know that the growth has been offset by efficiencies that we've made elsewhere, and I'll ask Stuart to talk you through the way that works in the underlying detail of the proposal.
Yes, I mean, things like where the growth has been in respect of new financial powers, there's built in an efficiency within that. So while we're asking for an increase, there's some efficiency that's come out of there. And on top of that, the 6.2 million of efficiency savings we've made since 2014-15, they continue to flow forward as well. So in this respect, we were always looking at efficient ways of working. And just in this case, we haven't specifically identified them as this is what we will look to achieve, but the budget is built around inbuilt efficiency savings.
So you have internal targets for savings in the business?
Yes, we would look to do everything on a value for money and efficient basis.
But you don't allocate, say, a percentage to the different departments or whatever to achieve?
No.
Done that this time. As the Commission knows, in previous years we've generated significant efficiency savings by focusing on specific issues, but we don't apply a blanket 5%, 1% efficiency saving assumption because we think that's not an appropriate way to go about it. We wouldn't be recommending audited bodies to do it, and we don't take that approach ourselves.
So how do you measure it?
Very much by looking at what we're achieving for the cost of achieving that. Diane can talk you through, I think, the way we do it in the budget process overall.
And as I mentioned in an earlier answer, we've recently reported extensively on this to our own audit committee. So we, when it comes to the budget, we start with the budgeting process starts early on. We start looking with a blank sheet of paper about what our needs are, what our growth needs are, what our ongoing efficiencies are that we're saving. We have some programmes of work and programmes of development that are delivering efficiencies primarily around looking at the costs of our people, the procurement of firms where there are ongoing savings in the life cycle of the contract that we have, and over time we have looked at all of our areas of expenditure and delivered significant savings, particularly from our property portfolio and from our move. We continue to do that, so at a business planning level, each business group is looking at how they can be more efficient, whether that's the staff mix and skills mix that they have, how they use people, but also because we've been growing and taking on more audit responsibilities, how we can meet those new audit responsibilities in a way that delivers quality and value for money. In previous budget submissions, we've reported on some of that. We do report annually in our annual report and accounts on the efficiencies we've achieved each year, so you will have that coming to you in June this year as part of the annual report and accounts, and it's something that is part of the daily work that we have. There's a strong challenge process when it comes to budgeting. So there's challenge at business group level, at management team level, then at the audit committee and the board, where we look at the movement over time, the efficiencies that are planned, our capacity, the pressures that we've got, and the ways in which we're developing growth. The earlier discussion about the size of the increase in our requirement this year to meet our new responsibilities is partly driven by some prudent requests in previous years in relation to our new responsibilities, where we consciously decided we would make a midpoint request rather than a request further up the range of options that we had. So we do take quite a prudent approach to growth and costing, and we have a significant challenge process built into the system.
Thank you. And I realise we're out of time, but page 14, paragraph 54, the Office of National Statistics has reclassified you. Has that got any implication at all we should be concerned about?
We have done as much due diligence on that as we can. We believe that there are no implications that we or you need to be concerned about, and we are keeping a very close eye on it.
Thank you. Do members have any other questions they would like to ask?
I have one last, if I may.
Okay.
Well, a specific one, sort of following up on the Chair's quite strong remarks on audit quality. Now, the budget includes a £250,000 provision for audit quality inspection support, which was the same as last year and the same as going forward. Now, given that the quality of public audit in Scotland 1819 report said that 57% of your staff believe that the training or development they receive enables a high quality audit, you're increasing in size, you're increasing in workload, 43% perhaps don't agree that they get enough training. Should you not be putting more into the budget in this quality support line?
Could I just add, the budget line that you're looking at is about the team that's independent, that's looking at the quality
I
of
understand that, but they are looking at what you've done.
Yeah, but the investment in quality in our delivery is reflected in our learning and development budget lines, and also the way in which we're recruiting and modelling staff and so on. So it's not in a single place. That's that budget line you mentioned is the team who are reviewing the work and reporting in public on that. The quality, the investment in quality is built into learning and development and other programmes of work in the budget. So, as you say, we.
But you're doing more, therefore, do you not need more support to look at the output?
We aren't planning to. We're planning in this budget to continue with a programme of work, which we had already mapped out to meet the 5-year audit appointment cycle that we're in. And we'll be taking stock of the scale of that when we come to look at what the outcome of the next round of audit appointments is and what the split and mix is. But at the moment, we have active processes in place to manage quality. We report to the Accounts Commission, to the Board and to the Auditor General on any in-year risks, and we are very engaged in the wider discussions on the audit profession, but that isn't yet indicating to us we need to change the programme of work on that budget line, but built into all the other budget lines is our investment in quality and development.
Okay. Do any members have any other questions they'd like to ask? In that case, I'll thank the members for their attendance, and again note that it's Ian Leach's last meeting, so congratulations on surviving it, Ian, and we wish you well.
Be familiar for a moment, Colin, and thank you for the kindness and courtesy you've shown and your colleagues over the time I've been here. It's been fascinating, it's been challenging, but thoroughly enjoyable. And as you've seen today, as you've seen in many times before, and sparing their blushes, the highly competent people we have, the Auditor General, Caroline Gardner, and Anne McGivern, they are superbly capable people. And I leave them in the very capable hands of the new chairman. And all it remains for me to do is to say, to misquote, I suppose, the two Ronnies, it's goodbye from me and hello from him. Thank you very much.
Thank you, Ian. And I now move the meeting into private.